So, let's talk about what happened in early 2026. The financial world got a serious wake-up call. After a pretty strong 2025, gold and silver prices didn't just climb, they went vertical. I mean, this explosion in value caught just about everyone off guard, and it signals a massive shift in how the global economy works. We're going to break down exactly what happened. First, let's look at gold, the world's classic safe haven asset. Well, it didn't just break records, it absolutely shattered them. It blew past the huge psychological barrier of $5,000 an ounce. This wasn't just a blip, it was confirmation of a massive bull run, a global stampede toward tangible assets. But, as wild as gold's run was, silver's rally was honestly even more incredible. What people used to call the other precious metal rocketed past the $100 an ounce mark. To put that in perspective, it tripled in value in just over a year. This wasn't just a price move, it was a fundamental rethink of what silver is actually worth in today's economy. So that brings us to the big question, right? Why is all of this happening now? This isn't your garden variety case of market jitters. Nope. What we're seeing is a whole bunch of powerful forces all hitting at the same time, creating the absolute perfect storm for precious metals. And to really get to the bottom of it, we're going to look at this from every angle. We'll start with the geopolitical sparks, then dive into the deeper economic engine driving this thing. We'll figure out who's doing all the buying, look at silver's totally unique new role, and finally, ask what this all means for the future. All right, first up, the geopolitical fuse. Look, there were deeper things going on for sure, but a couple of key events in early 2026 were the immediate catalyst. They were like pouring gasoline on a fire that was already starting to smolder. It really kicked off with what everyone's calling the Greenland crisis. Things got heated fast. The US threatened to basically annex the territory, which led to a major standoff with some of our key European allies. This wasn't just a trade spat, it was a move that shook the very foundations of NATO. It sent this huge wave of uncertainty through the markets, and investors started scrambling for anything they considered safe. And right around the same time, a very swift U.S. military operation in Venezuela ended with the capture of President Nicolas Maduro. Now, this had a really direct and maybe unexpected impact on the physical gold market. Why? Because it completely blew up these long-running illicit gold smuggling routes that were being used to fund networks tied to Iran and Hezbollah. So yeah, geopolitics absolutely lit the fuse. But the explosion itself, that was powered by something much, much deeper. We're talking about fundamental economic shifts that have been building up pressure under the surface for years. You have to look at the big picture. The Federal Reserve had already cut interest rates several times, and then the US dollar took its biggest nosedive in 50 years. When you combine that with this growing, frankly, panic over the US national debt, well, suddenly, holding government bonds and currencies doesn't look so hot. And assets that don't pay interest, like gold and silver, they start looking incredibly attractive. Now, to understand this next part, which is critical, we have to talk about something called paper silver. For decades, the price of silver hasn't really been set by people buying and selling actual silver bars. It's been heavily influenced by financial products, things like futures contracts, that are basically just a promise to deliver silver later. And here's where it gets crazy. This is the heart of the problem. For every single physical ounce of silver that actually existed and was ready for delivery, there were an insane 356 paper claims on it. So what happens when the big players, the smart money, lose faith in those paper IOUs and start demanding the real thing? You get a bank run, but on the vaults. And it exposed just how flimsy that whole system really was. This quote from a market insider at the time just captures the feeling perfectly. This wasn't just about prices going up anymore. It was a crisis of faith in the system itself. The fear was that the paper promises simply couldn't be kept, and that was causing the entire structure to just crumble. Okay, so we've covered the why, but what about the who? I mean, this kind of rally isn't being driven by a bunch of small-time traders. A whole new class of huge strategic buyers has stormed into the market. And the key thing to understand about them is that they are, for the most part, price insensitive. They aren't trying to make a quick buck, they have long-term goals, and paying a high price is just not their main concern. And the demand is really coming from three main places. You've got central banks leading the charge, making up the biggest piece of the pie. Then you have a mix of big institutional funds and regular retail investors. And finally, and this is a huge part of the story, you've got a massive and growing demand from industrial users. And if you look at why each of these groups is buying, it all starts to make sense. Central banks are deliberately moving their reserves away from the US dollar. Big institutions need a hedge against all this instability. Industrial users in fields like AI and solar absolutely need these metals to build their products, and yeah, even regular folks swept up in things like the Costco gold boom are making a flight to safety. This isn't just speculation, it's a huge strategic shift of capital. Let's drill down on silver for a second, because its story is truly wild. For so long, it was just thought of as poor man's gold, right? Well, that's over. Silver has gone through a complete transformation. It's now a critical, strategic industrial material. It's absolutely essential to the tech of the future. So, three things basically collided to create this new reality for silver. One, China reclassified it as a strategic material and slapped on export controls. Two, industrial demand from AI, solar, and EVs just went through the roof. And three, all of this is happening when the market was already in its fifth straight year of a supply deficit. There literally wasn't enough silver being mined to meet demand even before this new surge. And this is the real kicker. With China controlling somewhere between 60 and 70% of all refined silver, its new export rules give it a massive geopolitical weapon. It has basically split the global market in two, causing the price you have to pay for physical metal in Asia to absolutely skyrocket, as manufacturers there are just scrambling to get their hands on whatever they can. So when you put all of that together, the geopolitics, the shaky economy, the squeeze on physical metal, and this unstoppable industrial demand, you have to ask the question, is this the new normal? Is this rally here to stay? Well, the big banks have been forced to rip up their old forecasts and issue new ones. JP Morgan and Goldman Sachs are both looking at $5,400 for gold. For silver, you've got Bank of America seeing $65, while BNP Paribas thinks that $100 mark we just hit might actually become the new floor. But some analysts think even those numbers are way too low, especially for silver. When they look at this historic imbalance between supply and demand, they're throwing out some pretty eye-popping numbers. They see silver potentially hitting 175, 200, or in some of the most extreme models, even $375 an ounce. Which really leaves us with one last big thought. This whole metals rally, maybe it's not just about numbers on a screen. Maybe it's about a global flight back to reality. In a world that's so defined by digital promises, by endless debt, and by alliances that feel like they could break at any moment, maybe what we're really witnessing is the world relearning the value of things you can actually hold in your hand. This explainer was based on analysis from our friends at WiserLab. You can find more of their great work over on YouTube. And as always, just a reminder, this is for informational purposes only. It is not investment advice.